Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khelka.
And I'm Yatin Mota.
Well, it was a very volatile and quiet sort of day when it comes to the Nifty, even though we have managed to shut shop around that 18,650 mark. But during the most part of the day, we were, kind of moving in a very thin band.
Correct.
Between 18,000 to 18,600 to 18,650 mark. So we managed to end around that 18,650 mark. And what was not doing well today was the entire metal pack. That pack was a drag on the index. In fact, if you look at some of the other sectors that were doing well, it was the private banking pack, the FMCG pack. IT was also not doing all that badly. Media was another sector that was gaining somewhere around 1% or thereabouts. In fact, under pressure was metals as well as the pharma pack. I want to mention here, but Nifty gainers, if you look at that, private banks, Kotak Bank, Axis Bank were among the top movers. Bajaj Twins were also among the top gainers, and Cipla was one from the pharma pack that was bucking the trend in today's session. Among Nifty losers, metals, as I said, Hindalco. Top loser, Tech Mahindra, Tata Steel, Dr. Reddy's and L&T. Apollo Hospitals reported its numbers just a few minutes ago. In fact, the numbers were below street estimates. I think it was the profit grew somewhere around 50% or thereabouts, vis-a-vis expectations of profit doubling compared to compared to the same quarter last year. But that didn't happen. That stock was in focus. Aside of that, the mid-cap index was pretty firm. I think gained somewhere around 2 to 3% in today's session. A lot of movers on the mid-cap end of the markets once again reacting to numbers and news flow. Yatin, want to take us through
Clearly,
some of them?
Before that, you mentioned Kotak being the top Nifty gainer, and tomorrow we have the MSCI rebalancing. That is one event to watch out for.
Right.
Because the MSCI event would mean that HAL, Max Financial as well as, Max Healthcare, as well as other stocks will be included in the index, whereas Kotak Bank will have a highest weight, in its history, and probably would see an inflow of nearly 6 to 7,000 crores. That is what the brokerages are anticipating. So watch out for Kotak. Last half an hour of trade tomorrow will be quite interesting. And also exiting the MSCI index are the Adani group of stocks like Adani Total Gas as well as Adani Transmission. Both of these stocks were down nearly 3 to 4%. So watch out for that one. Well, if you could talk about the mid-cap index, Hikal, after reporting a strong, fourth quarter earnings, wherein we saw 50% plus kind of a revenue as well as profit growth, saw 8% jump in its share price. Also, we had Aurobindo Pharma. Post the conference call, analysts had upgraded, their estimates, a few of them, and most of them maintain a buy with a, target price higher than the current market price. Today, the stock was up nearly 6.5%. RBL Bank, that was a top F&O gainer, 6% up for that one. What was not doing well is the likes of Campus Shoes. Stock was down 8% after reporting weak set of quarterly earnings. CEAT, Jubilant Pharmova, as well as RVN and other stocks, wherein we saw some sell-offs. In fact, RVNL, we'll speak about the stock later because we have some results related thing to share with you. But yes, overall, there was a mixed bag as far as the mid-cap results are concerned, and probably the reason why the advance decline ratio was slightly favoring the declines today.
Right. I think on that note, let's take a look at some of the stocks that are on our radar this afternoon, starting with, something that was pretty cozy in today's session. That's Monte Carlo for you. That stock is at a 7-month high. In fact, rallied somewhere around 10% or thereabouts. At one point, I think it was up 16% or thereabouts when I last checked. But, ended high by about 10%. A good revenue growth in a seasonally weak quarter for the company. In fact, profit has also grown somewhere around 50% on a YOY basis. Company has delivered when it comes to its, FY 2023 guidance that it had given. And it has in fact surpassed the guidance of opening somewhere around 40 to 45 rather exclusive business outlets. I beg your pardon. Management, however, was sounding a little cautious, and in fact, in an interview to CNBC TV18, management had said that it is actually very cautious when it comes to demand and expects some bit of cut to come in when it comes to discretionary spends. And they haven't really given a full year guidance yet. They said there's a trade show coming up in August, and it's only in the second half of FY24 that they can perhaps give a guidance when it comes to the future. The company has plans to open somewhere around 50 to 55 exclusive brand outlets in the current fiscal, and once operationalized, J&K plant can give revenues to the tune of 200 crore rupees or thereabouts for the company. The company had very recently forayed into home textile segment, and it expects reasonable growth to come in from there as well. Some around 200 to 250 crore rupee worth of revenue expected from there. If you look at the stock, price to earnings ratio, it's somewhere around 13.5x, which is much lower than the sector PE of 116.3 or thereabouts. And interesting to note that over the last year, the stock has rallied somewhere around 70%.
Wow.
So it has moved up quite a bit. And another news snippet that I want to put in is that Dolly Khanna, who's a renowned investor, holds somewhere around 2% stake in the company. So that's all in all Monte Carlo looking good, but commentary on demand hasn't been all that upbeat. So we'll have to see how the situation pans out when it comes to demand as well as discretionary spends, as the management has indicated.
Clearly. So that is all about Monte Carlo, but the other stock in focus was Aurobindo Pharma. We spoke about it, that this was one of the top gainers as far as Nifty 500 is concerned. Today we have DAM Capital, which has buy rating on the stock with a target of over 800 rupees per share, which means that even from the current market price, the brokerage is expecting a 20% upside. When it comes to the management commentary, it was quite strong. In fact, they are looking to ramp up in segments like injectables, biosimilars, vaccines, as well as APIs. So yes, a whole host of new products that Aurobindo is looking at with terms of growth avenues. Also, the R&D and capex plans will be funded through internal accruals, which would probably bring in more capacity as well as better visibility as far as the revenue growth is concerned. In fact, the investments which the company is making, according to DAM Capital, in the next 2 financial years, the real impact or the outcome would be felt on the revenue growth as well as balance sheet growth. So clearly, brokerages from the long-term perspective are even bullish on Aurobindo after the rally that we saw from the lower levels.
Right, Aurobindo is one stock that we spoke about yesterday also. In fact, the only thing is, I think the return ratios haven't been all that great. So if that can improve, then maybe we can look at this stock as well. But the other stock on my radar today is Jubilant Pharmova. There is a bit of news flow. The stock was down 8 to 9% last when I checked. Its facility in Montreal, the Canada contract manufacturing unit, in fact, has been classified as official action indicated by the US FDA. Now, this facility was inspected by the US health regulator back in February 2023, and now that the observations have been put as official, that means the US FDA may withhold approval of any pending applications or supplements. So that has come as a setback for the company. In fact, its Roorkee plant has already been under import alert, and the company has been engaged with US FDA for remediation of the Roorkee plant. So we'll have to see how this entire US FDA thing pans out for things to improve here on. But there's another bit of news flow that Hari S. Bhartia has decided to step down as the MD of the company starting tomorrow. And in his place Priyavrat Bhartia will be taking over from the 1st of June. So that's one set of news, change of guard really taking place. If you look at the stock performance, down 18% in the last 1 year. Return ratios have been pretty poor, given the fact that last year it gave out negative return on equity. But an interesting point to note is that Rekha Rakesh Jhunjhunwala has a little over 6.5% stake in the company. So a big name to own a part of this stock. So see how it goes on from here on. Obviously the future path will depend on how soon it can resolve the issues with US FDA, but foreign investors have also been reducing their stake in this counter.
Absolutely. So this is one pharma stocks we will watch out for. But RVNL, this is one railway stock which has moved up 60-70% in the last few trading months. In fact, the results were quite disappointing. In fact, if you look at the net profit, it was down nearly 5% on a year-on-year basis. Revenue declined by 11%, and also if you look at the EBITDA, that was down 8%. The street was anticipating a very strong set of earnings, especially when it comes to the March exit quarter. But yes, there was some disappointment on the operating front. Also, things didn't move much. Probably that is the reason why the stock was locked in lower circuit of 5%. Obviously, the management commentary as to how really FY24 looks like versus FY23, what will the growth avenues, because the order wins for RVNL have been quite strong. I don't know why really was March such a weak quarter. Probably there could be some capital work in progress or unbooked revenues. So that is one clarity zone wherein we could see some clarification coming in from the management. But yes, RVNL, after the sharp run up and disappointing fourth quarter earnings, has seen some downward pressure. Obviously, given the fact that the order book is quite strong, the execution now will decide the fate of the stock as well as the results moving forward.
Right, and you know, I think valuation wise also the stock looks pretty reasonable given the
Yes.
fact that, you know, its PE is much lower than the sector
Correct.
PE. Well, with that, I think we've come to the end of this edition of Closing Bell. It was a fourth straight day of gains for the markets, but the bulls did take a breather today. But we'll have to see whether or not the bulls can resume their rally with gusto starting tomorrow. Well, with that, it's a wrap. Thanks a lot for watching. If you have any comments, send them in to us on the comment section below. But in the meantime, keep following Money Control for all your news and updates. Thanks a lot for watching.